First Hawaiian Bank's economic advisor, Leroy Laney, will now focus on Maui and the state's economy. Leroy served for 8 years as chief economist at First Hawaiian Bank and is currently professor of economics and finance at Hawaii Pacific University. Please join me in welcoming Dr. Leroy Laney.
Well, thank you, Brian, for that gracious introduction, and it is my pleasure to be here once again. It is the 23rd year that I have appeared before you. As Brian mentioned, as usual, I did spend some time on Maui this summer collecting data and interviewing residents to get their own insights into the county economy. Local observations and opinions add depth to the raw data, the raw numbers, and they yield insights that the data really can't show. And that's why we continue to do this, because it gives another dimension that some other forecasts don't have and don't provide. For the past couple of years, one of the biggest underlying messages about the state economy has been the contrast between recovering tourism and lagging construction activity. This year, for Maui at least, that message seems to be changing. One indicator is Maui construction jobs. I just showed you the number at the statewide level. But for Maui, we have had, as you can see in the slide, a uptick recently. That rise started late last year, and Maui is the only one of the 4 counties to see that kind of increase. This obviously is at least one of the reasons for the overall Maui job gains that I showed you earlier. Most of the construction is commercial in nature, not residential. So it's mainly the bigger contractors that are doing better. There does continue to be some shakeout among smaller ones. Here's another indicator at the county level of present and future Maui construction. The striking thing about this chart is first quarter 2012 growth, the most recent quarter that was available when we went to press. It exceeded, as you can see in the chart, that's a big jump there, it's 350%. On a quarterly year-over-year basis. And anytime one sees that kind of surge, it's probably due to a few major projects. So let me go ahead and summarize a few of the main ones. I'll start the Maui discussion of construction projects this year with Alexander and Baldwin, mainly because of a couple of long-awaited developments that you're all aware of, but coming from that important player in Maui's economy. For about as long as I can remember in these reports, we've mentioned 2 A and B projects that have proceeded in fits and starts over the years. The first is the Courtyard by Marriott Hotel, which, as you know, had its grand opening in July. A $16.5 million, 138-room hotel. It's minutes from the Kahului Airport. It's well-suited for several markets, inter-island business travelers, state residents, in sporting events, flight crews, and visitors who might miss or have delayed flights. So that property should do well. The second A&B project is the 179-acre Maui Business Park Phase 2, zoned for light industrial use close into Kahului and the nearby harbor. The areas that are outlined in yellow in this slide are already under construction, and future increments are outlined in green. Lot closings are expected to begin in late 2012. Another reason for that permit surge that I showed earlier is the Andaz Wailea Hotel project. It's a renovation, as you probably know, of the shuttered Renaissance Hotel in Wailea. That property, which aims for an early 2013 opening, is a major project with a different type of boutique accommodation. It will contrast significantly with the previous property that was on the site. There aren't very many Andaz hotels around, but they're a member of the Hyatt family. And that, I believe, all of those permits were let in that quarter with the 350% increase. The other commercial construction is happening at Maui Village. I paid a call on them this year, adding to existing tenants like Paradise Beverage and Oceanic Time Warner and the Mormon Church, or others that are in the building process like Walgreens and Ace Hardware. So those are all construction projects that are ongoing or will be coming out in the future. Wind farms additions are in progress also. The Kahiava Wind Farm Phase 2 just added 14 more towers to the existing 20 on the ridge above Maui, and Ulapalakua-Oahe Wind Farm has broken ground for 8 more turbines on the slope of Haleakala. Further down the pipe, the master planned Hanuaula project in Wailea, that's the old Wailea 670 project, received EIS approval in July. That development is expected to include up to 1,150 housing units above Wailea Resort, along with a golf course and a clubhouse and retail commercial components. And then also planned are 250 affordable housing units off-site. Also down the pipe, let's not forget public sector construction. One major project at the airport is a consolidated car rental facility, which will provide public transportation for all car rental companies rather than having car companies themselves furnish separate transportation. And airport terminal improvements also are in the offing there. Maui real estate has picked up in recent years as falling prices and much lower mortgage rates have increased affordability. It may be a buyer's market now, but buyers who wait too long may lose the property. Inventories have declined almost 20% over the past year for both single-family and condo units. Short sales and foreclosures are still out there, but they're being absorbed as the market returns to normal. The decline in median prices for both single-family homes and condos seems to be reversing, or at least it's leveling off. Well-priced homes are attracting multiple offers. Sellers are being advised by realtors to get pre-approval so they can shop with greater confidence. And as always, concentration on any specific geographic area across Maui can be misleading, mainly because of a small sample size, and that can distort even broader numbers than what we see on Maui. So I always put that in as sort of a caveat to neighbor island real estate numbers. Local Maui retailing is improving slightly this year, but for most lines it hasn't broken into double-digit growth. Food services are up. That reflects more foot traffic. Things like personal services are reported to be down. Anchor stores are doing well, as well as the big box stores. Those that I interviewed this year indicated spending patterns are changing. Things like electronic items are up. There are a number of traditional items that tend to be down. Maui local retailing does seem to be doing better than its mainland counterparts, however. Tourism retailing is a different story, and that reflects the health of the visitor industry. This is particularly true in areas where timeshare concentrations are high, like in West Maui. Close by timeshare units increase foot traffic because occupancies run high, and because Maui is a premier destination, owners often trade their units for vacations elsewhere, and that increases first-time visitors who usually spend more than repeat visitors. So Maui tourism retailing is doing quite well. When I talk about Maui agriculture, I always lead with HC&S, the state's lone remaining sugar plantation. It survived mainly because of its size and economies of scale, 35,000 acres, and anything that reduces that size makes it more vulnerable. But the future is looking up there also at HC&S, where sugar production has been rising in recent years. Production is still below a sort of a target of 200,000 tons a year, but it seems to be getting there, as you can see in the slide. The plantation has achieved higher output mainly by bringing more acres back into production. Water availability is still a problem, and HC&S has suffered under what has turned into a 12-year drought. With sufficient water and sunlight, sugar can be cultivated even in very poor soil. And thus Maui Central Valley is appropriate for sugar, but other farm crops that require better soil are not likely to make it. A number of other crops have been tried there over the years, but none with much success. HC&S management emphasized to me this year that the future there is mainly in biomass energy creation, not food sugar. Biofuel technology may not be quite there yet, but it remains a major goal. The plantation provides about 5 to 6% of Miko's power, and it used to provide more than that. So those are all important roles for HCNS. The bottom line for Maui this year is just this. Thanks to a continued robust visitor industry and growing strength in construction, Maui leads other neighbor islands in near-term growth prospects, and that's the good news. The tourism strength really is not big news. That has been healthy on all islands recently. Its relatively quick snapback from the Great Recession surprised some, but it puts the entire state economy ahead of some other regional economies that saw their main economic engine disappear and not return at all. But I think construction's revival, or tentative revival at least, is bigger news. Maui is the only neighbor island that exhibits much in the way of current or near-term growth prospects in the construction industry. If some of the longer-term plan projects kick in over time, that construction strength can be sustained. Construction's revival hasn't shown up much in some quarters, such as harbor throughput. I talk to these people always when I do the survey this year and in previous years, or some building industry suppliers, but the groundwork is being laid. Well, I think I will conclude on that, and as Jack mentioned, he and I will take a few questions now if we have time. Thank you very much.